small, medium-sized business men and women, not that I'm referring to their physical size, I'm talking about the businesses they represent. They've been, as I said, impervious to these Chinese trade wars and rough talk back and forth. But that might not be for long. For example, the president of the Atlanta Federal Reserve said just recently that, he's concerned that a lot of companies are holding off, and he's saying this of all companies, holding off on new investment because they're uncertain right now of making new investments in this environment. This is coming from Raphael Bostic, the man who runs the Atlanta Fed. The read on all of that with David Asman, market watcher Alan Nuckman. David, that's a kind of a interesting spin on where this could go if it affects future investment plans. And that's what you always fear with even trade tiffs that haven't even become wars, just that it puts a chill on activity because the better part of valor is to keep your powder dry.
Well, it's already affected people out there, people who are buying certain things that tariffs have already been applied to. The best example of that is washing machines. Now, most people don't buy a washing machine every year. You buy it every 5 or 10 years, maybe. But the fact is that the Trump administration put a 20% tariff on washing machines. The price of washing machines has gone up 17% since that happened. And the question is, who does it benefit? I mean, you look at a company like Whirlpool. Yes, Whirlpool, which makes washing machines, gets a benefit from the washing machines they sell, but they are also steel consumers. So the tariffs that have been put on steels are costing them. At first, their stock went up about 16% when the washing machine tariffs were announced, but now it's come down 18% as a result of the steel tariffs, which are costing that company. So there is a net cost not only to the consumer, but also to the companies.
Do you think, Alan, when you follow it, that some of these, district Fed presidents and a lot of them economists by training, overhandling this? I mean, in Bostic's case, he was saying, I began the year with a decided upside tilt to my risk profile for growth, reflecting business optimism. Now, I'll just paraphrase here, not so much. All because of this?
Well, we're not seeing it that much in the price. We're in a bull market in uncertainty for the last year and a half, but we're also still in a bull market. Let's look at it. The Dow and the S&P are up about 15% in the last 52 weeks, and the NASDAQ is up 25%. So you would think something like this could shake the markets, and it really hasn't. The last 3 days of price action have been relatively positive in the fact that we've opened sharply lower on the overnight news, but Friday and yesterday we essentially bounced back to near unchanged, very modest losses. And so far today, we've seen that as well, where the worst was in the overnight, and people are using this as a value area to buy. But what hasn't happened is we have not seen a spike in the VIX or the fear. The VIX is still at 13. We were at 50 in February, so that's 70% lower than we were back then when we saw that VIX explosion and people were truly fearful.
David, I know you follow these comments we get out of officials at the White House, and sometimes we're relieved just to hear that they're still alive and talking to people. I think sometimes that's why we respond often positively, or it eases our concerns. But nothing that I heard in Peter Navarro's comments have eased concerns, at least that I had, that this is going to be resolved quickly and amicably. On future talks, he says, our phone lines are open. They've always been open, to which I would add, duh. Continues to characterize this as a trade dispute. That's a double duh. And a report with further details will be released later today, but that nothing has changed today. So why even make an announcement?
Well, we have to remember that there is a big split among the president's trade team. You have people like Peter Navarro, who is, I would say, very much against complete open free trade, and then you have people like Larry Kudlow, who just suffered a heart attack last week, so he's kind of out of commission, at least for the moment. He plans to go back, but who are big free traders. So you have the free traders versus the fair traders in the White House, and they have very different policy prescriptions. Just take one example. The president has suggested that because we have this huge trade imbalance with countries like China, that's inherently bad for our economy. That's not always true, and I asked Larry Kudlow about that. I mentioned 1984, we had a terrible trade imbalance. We grew at 7.3% in 1984. It doesn't necessarily mean if you have a bad trade imbalance, you have a bad economy. Larry Kudlow said he doesn't like that metric of using the trade imbalance and having an artificial number there attached. It has to be a certain number in order for us to stop the tariffs. So there's a big question of who is actually advising the president. Now, we have to remember, as you suggested before, We only have $50 billion of tariffs so far. The suggestion of new tariffs on China are only that. They're only suggestions. We don't know where it will end up. It could end up with $400 billion of tariffs against China, which is almost about what we have in a trade deficit with China. That I think would scare the markets. But again, right now, it's just talk. And as we've seen, there's a lot of just talk from this administration.
Is it your sense then, Alan, to David's point, that it's just talk, that it remains just that, and the markets sort of find their equilibrium here, that this might be an initial overreaction, that the Chinese might, to the president's point, still need us more than we need them? I mention that because our aforementioned Charlie Brady, he's our resident Svengalian genius. Sort of, he's our you, if you will. But anyway, he was saying that Shanghai Composite has tumbled about 11% since the president first announced these tariffs dating back to March 1st, while our markets are up, minus today, up about 1 or 2%. So we're absorbing this a heck of a lot better than they are. What do you make of that?
I think you were right on your point that you said nothing changed with Navarro's comments today, but nothing's changed actually in the big picture either. So it's been a lot of talk and discussion, and these are proposals as it stands right now, and most people are confident that they will be worked through somehow. The one thing that we don't discuss is that we talk about the goods trades deficit. We're a services economy.
Right.
So we have a service surplus with China. So until they start hurting us that way, I don't think that's, I think the rest of this can be ironed out. But I've got confidence in the markets. Again, we were within striking distance of the all-time highs in the S&P, closing in that 2,800 level once again with new highs in major markets. So, I think the momentum still remains strong. We've got earnings to start after the 4th of July. I think this is just a little bit of a pause here. At the end of earnings season, people are always finding some woes, some worries, and I think this is the latest issue to focus on.
Can I just say one other thing, Neil, which is that as dangerous as a trade war is, we saw what happened during the Great Depression in the 30s. I mean, trade war can really kill an economy.
I didn't see it.
Yeah, you didn't see it, Alan. And I've read the history books. I didn't see it either. But the point is that domestic imports in total as a percent of the economy is only 15% of our entire economy. It's still a lot of money. It's $3 trillion, but that's only 15% of the economy. And that 15%, the $50 billion that we've tacked on since the Trump administration came into power is only a small percentage of that. So to what Alan was saying, to put it in perspective, it's not really affecting the economy unless you're buying a washing machine or unless you're a steel consuming company. Those people are feeling it, and eventually that might boil down into the market. But so far, not so much.
And here I always thought you brought your wash out, David. I didn't know that you were...
No, I go down to the Hudson River and do it by hand. I save a lot of money that way, Neil.
I thought that was you. All right, guys, thank you both very, very much.
Thank you.